Well, the volatility right now is good. In the near term, we're going to view it as something good. We believe that the market has not seen the high yet for 2010. It's going to continue to push higher. There's a lot of momentum left in this market. And also, too, it's because the market is still in complete denial of what's going on around the world and here at home. Our number one focus on this volatility really isn't how high the market's going to go, but when is the market going to make that turn? Because when it does, we do believe it's going to go into a complete free fall, much like we saw in oil back in 2008, that could push the Dow as low as 5,000 or even lower by the end of this year. And that's our number one focus right now.
Jim Hardesty, what about this volatility? Good sign, bad sign?
I happen to think it's a bad sign. I think it undermines investor confidence, and confidence is important in pushing this market higher. Having said that, I think that the earnings levels are much better than anybody thought at the beginning of the year, and that the market does have room to make it to 11,500 to 12,000 by year end. We're about halfway there.
So you're looking for 11 to 12,000, and you're looking for 5,000. You are now,
Yeah, I'm thinking.
That's an incredible punch from where we are now, right? That's fair to say. We're
Yeah,
going to lose 50,
no, absolutely.
60% of our value here by the end of the year. So do you need a catalyst for that? Does that just happen all of a sudden? What drives that?
Well, here actually we're looking for 11 and 12,000 by maybe the end of June or middle part of July. Then when we start to see that turn, you can really boil it down. There's a lot of catalysts, but you can really boil it down to three things. One, when we start looking at second quarter GDP, it's going to be okay, but disappointing. Also, when we look at delinquencies in homes right now in the United States, delinquencies are down. Foreclosures are going to start to go up because the default rate's going to go up. And so as defaults go up, we're going to see a record number of foreclosures in this country. Of course, the market will trade ahead of that. And then the third thing, too, is when we look overseas in China, China is just another version of Dubai, except for a much greater scale. You can't build cities for millions of people and have them half full. There's problems with that. And not only are they going to be facing this real estate crash themselves, but they're facing inflation. So they have to slow their economy down in the midst of a real estate crash. So we're going to have a handful, and I didn't even mention Europe. So we're going to have a handful of things that are very serious catalysts to help push that market down. And the free fall is due to the fact you can't also forget our financial system has $17 trillion of leverage. It only takes a handful of hedge funds to get a margin call before we start seeing this free fall take place.
All right, respond to that. He's making a lot of allegations there. Some of them are things a lot of other people are worried about.
Well, I'm totally
Those half-full
bummed,
cities in China, people have raised. He's got real concern here.
I would suggest he probably get a therapist and try it. This is very depressing. This is very depressing,
Yeah,
is what he's just said.
I'm down.
I've got to tell you, we see very much strength in the economy. The automobile industry is short of cars. If you go try and buy a car, they don't have any inventories. We manage money for a Buick dealer. His normal inventory, desired inventory, is 130 units. He has 36 in his lot as of last week. We've got plenty of momentum in this economy and just inventory rebuilding. The housing situation, that's looking at a glass that's been half empty for a long time and is starting to refill. We form 1 million households in this country a year. We've been building 500 houses. We are absorbing the excess inventory rather steadily. And last month, housing prices in all but 3 markets improved for the first time. So I don't see this collapse coming.